Hey guys, welcome back to the channel. Today we're going to be doing a reaction over a CNBC video that talks about, are we entering a recession in 2023?
March, that if the Fed went above 2.5% to 3%, they could, quote, crack the economy. They're above that now. What's going to happen?
Well, I think certainly the economy is slowing down, and ultimately we've got a recession. It's been bolstered. The economy has been bolstered by tremendous amounts of trillions of dollars of fiscal spending. But ultimately, when that is used up, I think we've got a mild recession. And if interest rates keep going up, we've got more than that.
Define more than that.
Well, we've got potential chaos in financial markets. I mean,
he's describing potential chaos in financial markets. Really, what I'm seeing out there right now is with the federal funds rate of 4.25%, financial markets are already in chaos. You know, just a year ago, the federal funds rate was under 0.5%. With an increase of over 400 basis points in a year, we've seen shock to the real estate market. We've seen shock to the bond market and the equities market. You know, two of the three major stock indexes are down more than 20% year to date. That includes the S&P 500 and the Nasdaq. The only really index that's not been battered too hard is the Dow Jones, and it's been down roughly 10% so far this year. As far as bonds, you know, bonds have had one of the worst years in the last 50 years.
Today's a good example with the overnight situation with the yen and the yen, what they call the yen carry trade. I mean, lots of money have been invested on the basis of shorting the yen and buying relatively safe alternatives like treasuries or stocks. And now with the yen strengthening as opposed to weakening, and with interest rates there moving a little higher as opposed to being close to zero, then this yen carry trade stands a good chance of being reversed, and that speaks to global assets as opposed to just U.S. assets and U.S. treasuries. Treasuries today, the 10-year is up 10 basis points on the basis of.
Guys, so it's very possible that the next recession that we're going to be going into is going to be a global recession, not just a U.S. recession. So, the United States has the Federal Reserve, but then you also have reserve banks in other prominent countries. Pretty much every central bank across the world is aggressively raising interest rates, and what that's doing is that's directly stifling economic growth. So, if you look at 2022, we actually had the first and second quarter, we had negative GDP growth in the U.S. Now, that alone would normally signify a recession. However, a recession wasn't officially announced, mostly due to strong economic growth in the labor force. So the labor force, if you look at the unemployment rate hit its lowest rate in the last 50 years. It matched the lowest rate at 3.5%. Significantly impact the labor force in order to bring inflation down. And really, when you look at all these factors, a recession is pretty much in the cards at this point. The Fed is targeting unemployment rate of 4.5%. Well, from 3.7% where we are right now to 4.5% or 5%, you're going to see, a lot of layoffs, lots of people unemployed. The real estate market's going to slow tremendously. Places aren't going to be hiring anymore. This is going to be a very different economy than what we've had in the last 10 years. Let's keep watching.
BOJ's move last night.
I'm a little more worried locally, Bill. I mean, you're out there in Southern California. It's a housing-dominated economy, and parts of the East Coast as well. I mean, what do you think these rates, this Fed, is going to do to housing, which is a multi-trillion-dollar economy to itself?
Yeah, I think two things. I mean, PIMCO was.
So housing is actually our nation's largest contributing factor to GDP growth. So if you crush housing, you're going to crush the national productivity.
Very good in '06 and '07 in catching the the debacle in terms of housing. These days, certainly over the past 2 or 3, 4 years, the Fed has given the chance of homeowners to term out their mortgages to borrow at 3 and 4% in terms of 30-year mortgages. So I don't think it's the same situation, but I do think going forward, if the Fed continues to raise rates, that the ability to equitize some of your housing, which is moving down in price, is going to be severely limited, and so that'll serve as a caution for the housing market. But in terms of a debacle, as in '07, '08, I don't think we're headed there.
So, guys, what he was talking about is we have more homeowners now with more equity than at any other point in history. And as they start to see their equity in their homes start to deteriorate over time, you're going to get a lot of scared homeowners. People are going to be eager to sell their house to capitalize on their built up equity. And that could be a driving force for more sellers entering the market. Now, another thing, guys, with unemployment going up, we didn't see a ton of layoffs happen in 2022. But, Bank of America here is warning that we're going to start seeing upwards of 175,000 jobs lost per month. I think they are targeting by the end of 2023 to hit nearly a 5.5% unemployment rate. Yeah, they're targeting 5.5% by the end of the year. We're going to have millions of people unemployed, unable to find work, and I think right now you're starting to see a lot of those layoffs happening in the technology sector. But as 2023 starts, you're going to start seeing non-technology companies also doing layoffs, freeze hiring. It's going to be a very different year than what we saw in 2022 early on, and 2021, and even 2020. Anyway, it's my overall belief that, we are definitely entering a recession in 2023. I think most economists would agree that whether it be a mild or severe recession, it's coming. Now, how should you prepare for this? Well, you need to get your financial ducks in a row, so to speak. You need to evaluate your job. Is there potential of layoff at your company? You need to make sure you are shining at work, going above and beyond, bringing as much value to your company as you can. If you haven't already, you need to start budgeting. You need to look at your monthly expenses, your monthly income. Make sure you have a monthly surplus. You need to build up short-term savings. You need to have some cushion in case, you do lose your job. We haven't had a recession like this since 2008. And with that, comes a lot of fear and uncertainty. And the best way to prepare for fear and uncertainty is to get a written budget, control your expenses, and pick up a side job if you can, and really get out there and hustle. Anyway, thank you guys so much for watching the video. I hope you enjoyed it. If you could, leave a like, subscribe, and we'll see you in the next one.